Good afternoon, traders and investors. Will back here with another one, coming to you with a Friday market recap. Hope all of you had a very good week of trading. As for myself and our Discord members, we had a lot of wins this week, some decent wheel trades, some decent directional trades, and some decent earnings trades. So a lot of wins as per usual. However, there are a few key losses that we will be going over in today's video. As per the account, we are now sitting still around the all-time highs. Relative to the S&P, we are beating the S&P still by a factor of over 2 to 1. So the performance over the course of the most recent year has still been quite good. Now, in today's price action, guys, the most hated bull rally just simply continues. And why do I call it the most hated bull rally, guys? Well, because it leaves people in a sheer state of disbelief, because the crash, the market crash, and the bear thesis has many different points. Now, take a screenshot if you want. I'm not going to be going over these. However, tomorrow I will be doing a dedicated video of about 20-25 minutes to explain why, in spite of all of these negative possible catalysts, does the market just seem to either not care or not be bothered by all of the negativity that's currently surrounding us? And why does it keep printing on new all-time highs? Why are some of the small cap stocks that have been dead for the last 2-3 years putting in 20, 30, 40, 50% gains in the last 2 weeks? I'm sure that question is a hot topic on everybody's minds right now. So I will be doing a dedicated video to this topic over the course of the day tomorrow. And I will be outlaying how to possibly be best positioned in the context of such a paradoxical market, let's call it, right? In terms of today's price action, though, the bulls were looking very healthy. So in terms of today's video, what we're going to go over real quickly is the technical analysis in terms of our major market indexes. How do we stand after this very volatile week? And thereafter, take a look at our big tech names and see how those are holding their prices up as well. And can we find some good levels to maybe go shopping for our favorite big tech stocks? Thereafter, we're going to take a look at a few hot names that have been in the market, names like SOFI, names like Robinhood, names like Square, and etc. We'll be doing a quick review of a lot of the hype plays of the most recent last 2 weeks. And to finalize everything, we are going to take a look at my portfolio, a full recap of all the beautiful trades that you see right here, and which positions I have remaining leading into next week as well. So it should be a fairly interesting video, guys. Let's jump right into the action. So SPY up a nice 0.31% today, and the QQQs are up a nice 0.16. Just keep in mind though, guys, next week will be a very short week. The Thursday session is, of course, a holiday in observance of Thanksgiving Day, and the Friday session, it's really small, but if you can't see it down here, the market will be closed at the Friday session for a half a day, closes at 1 p.m. Eastern. So next week, probably not going to be that volatile, and we also don't have that many news catalysts. Only on Wednesday, we're getting core PCE and the GDP number. The GDP number is already out. This is kind of just a revision. And the core PCE numbers, well, Jerome Powell actually gave them to us last week and in the last 2 weeks as well. So there shouldn't be much of a surprise there. The numbers are pretty much going to come in roughly in line with the expectations. So should be a fairly light week in the markets as well. We don't really have many big earnings because of the holiday, of course, but the biggest day, of course, is going to be on the Tuesday session. Names such as Dell, CrowdStrike, Workday, Autodesk, and many more, HPQ, Abercrombie & Fitch, should be the most interesting day of the week, especially for earnings as we kind of wrap up earnings season right away. Now, in terms of the heat map today, you will see that for the most part, it was a fairly broad bull market today, right? We did have a few names lagging behind, especially in terms of after yesterday, right? So NVIDIA kind of still struggling after their earnings. Amazon and Google still struggling after the, well, European Union headlines of an investigation into Amazon, and Google, of course, the Department of Justice pushing to break up the company, still getting kind of affected by that. Microsoft and Apple and Tesla, though, having very good days. Financials good. Overall, consumer defensive's good. The bottom half of the market also performing well, and healthcare remains a very mixed bag, of course, with the battle between, healthcare actually having good fundamentals, but then, of course, Trump nominating RFK as the new health secretary. So we know that he could be targeting these companies for more transparency. So healthcare kind of remains a fairly mixed bag, but overall, many more names were up in the green than in the red today in the markets. On the one-day relative, you can see that even better. Most of your sectors were green. Communication services and technology still struggling. Technology largely because of NVIDIA, Google, Meta, and Amazon, of course, and the rest of the market did good. But communication services down. On the 1 week, where do we stand? Well, we are much higher, at least than last week, except for communication services, which once again is Google and Meta. But for the most part, guys, very healthy market. We know that just last week, the market was kind of brutal to us, right? 5 straight days of selling action, and a close attention was being put on whether or not the bulls could continue this daily uptrend or whether or not we would get the rollover. Seems as though they want to continue pushing higher in spite of all of this negative data. And I used IONQ because what better place to put the crash and bear thesis right on a chart that is literally up almost 300% in the last 2 months, right? Fitting, right? So then there, in terms of that, let's now jump into our technical analysis portion of the video. And we're going to go through this section a little bit quickly, guys, because to be quite frank with you, not much has changed, right? In terms of the market structure right now, the bulls are still very much in full control of the S&P. Daily higher lows are set, and we're looking for the trend expansion. The weekly bulls also control the weekly uptrend, no secret there. We are just looking for the established weekly higher low, which we received, and now possibly looking for another leg higher. Just keep in mind the trend line, which is coming in right around here, around the 605 mark. So that will possibly be a point of contention, maybe in the next week and a half worth of trading as the bulls continue to expand. Of course, in the event we roll over, we do have support below us, 585 down to about 580. And the bulls still have a lot of room here. Even if we were to give this back, we do have a lot of space here between the higher lows, anything above 567, looking for a weekly higher low for further trend continuation. If you do not make new highs and keep going down, it is still the same leg of weekly consolidation. So just keep that in mind. All in all, though, percentage of stocks not looking too bad, guys. Percentage of stocks above their 50-day moving average. We closed the week at a very healthy 62, so no problems in terms of market breadth, at least on the 50-day moving average basis. And on the 200 longer dated moving average basis up here, as you guys can see, the market's putting in a very healthy week, 61% of all stocks above their 200-day. So you can see that the market is really not concentrated into just only a few key names. The market is actually quite broad leading into the next week of trading. Moving on to the QQQs right now, up about 0.16%. We know they're kind of being held back for a few reasons, right? Big tech, some of them cooperating, but a lot of them not cooperating at all. Amazon, Google, and Meta tumbling a lot this week. NVIDIA just remaining flat. Microsoft as well, fairly flat week. All of big tech, really except for Apple and Tesla, not really doing much of anything. If anything, they were more of a drag on the market this week than them helping the markets out, right? But the QQQs holding up the levels just fine right now. Daily higher lows are set, looking for the trend expansion into resistance, 515 all-time highs. And in the event we roll this over, guys, and test our support again, 499 down to 495, and we flush through. Just keep in mind who's in control of the longer term timeframes here. It is the bulls, and we would just be looking for another weekly higher low for further trend continuation, anything above 483. However, we do not have as much lift on the QQQs as we do on the S&P, right? You can see there's a lot more space on the S&P than there are on the Qs. So one thing's for sure, if you want these markets to remain healthy and the QQQs to push higher, you need some participation by semiconductors, and you need big tech to come out of this 2-week consolidation phase that it seems as though they've been trapped in right now. Moving on to XLF financials. So financials looking very good today, guys. Very healthy breakout pattern, right? Daily uptrend is clear as day right now. Higher lows are set and looking for the trend continuation phase. So at this point, if we do pull back anything above 50, let's call it 50 flat, right? Just going to be looking for a daily higher low for further trend continuation. Tons of prior resistance as support down there, and the 12 EMA acting nicely in the process. So financials has been one of the lead bulls, and the SPY really needs it, guys, because it's definitely not healthcare doing the work, and it's definitely not semiconductors doing the work either. And the QQQs, they're putting in a little bit of work, but the heavy lifting is all being done by the financials bulls right now. So in the event they need to take a breather and go into possible weekly consolidation eventually, because we're getting a little bit high on the weekly RSI. If we go into weekly consolidation for the higher low, anything above 409, 4609, higher low for further trend continuation, weekly bulls in full control of this chart right there. If we do head into it, guys, you need some participation from big tech, you need it from healthcare, and you need it from semiconductors as well. Only then will the SPY be able to just continue grinding the higher levels in the event that the rotation remains healthy. But we do have a lot of other sectors that are decently participating in the rally, but none as big as tech, semis, financials, and healthcare. That's why I focus on these ones, because they have the biggest weight in the S&P. Now, moving on to healthcare. Speaking of healthcare, decent little week of recovery by healthcare, but that is not going to be enough for now. We know that the context is this big daily downtrend for the bears right now, and this even bigger weekly downtrend for the bears as well. So we are in a stage of recovery for the healthcare sector. We are encountering resistance above us right now of 148 down to about 145. Very big level, guys. Prior resistance was support, blasted through it. Now it will be acting as resistance again. So I'm not expecting the bulls to just V-shape this back over above here, right? Most likely it will be a two-step process. So when you're looking for the two-step process, always measure the size of the bounce. And as you can see right here, the daily bounce is only up to about 42%. Not good enough. Need to see them at least come up to about 145 or maybe even 147 to the 618 to give the bulls the best chance at creating enough space off the lows to give themselves the odds in their favor of creating the higher lows into higher highs, daily uptrend cycle. Only then can we say that only then can we say that the weekly down, the weekly downswing is finished, and we look for the bulls to capture more and more and more to eventually recapture the weekly uptrend as well. So a lot of work remaining for the healthcare bulls, but one thing you can kind of find solace in is the fact that we are still holding the monthly uptrend and possibly looking for some further trend continuation into the end of the year, because we do know that usually in a seasonal function, right, we tend to get some very nice rallies into the end of the year. End of November and all of December should be quite good, but pay special attention. January, usually not so good for the market. So I do still think we have a little bit of runway rally left in the markets, but just don't get too greedy. Moving on to SMH right now. Well, semiconductors doing a whole lot of nothing. I mean, you can say that they're up on the week, and this is true, but not used to the semiconductor rallies that we've had in the past, right? We're used to these very nice bullish legs up that just don't seem to stop. And we haven't got one of those in a very long time. We are trapped between two levels right now. Overhead resistance, 250 to 260, and down below, 235 down to roughly 225. Trapped between two 10-point ranges, and there's no better time frame to see that on than the weekly chart. You can see loss of a clear direction on the weekly trend. You can argue that this is a weekly downtrend right now, and I would somehow agree, but you can also argue that it's really in the context of somewhat of a tightening range, just trapped between two levels. So we're going to need to see a key break either direction, guys. Either we break to the downside and look to the final support zone for the bulls. Maybe this is what the bulls are waiting for. Better entries and possible slight capitulation on the rest of semiconductor names, because a lot of them haven't done anything, guys. LRCX, still crushed. ASML, still crushed. Micron, relatively still crushed, right? AMD, still absolutely crushed. And the list just goes on, guys, right? ON Semiconductor, still at the lows. MCHP, relatively still at the lows, right? Every single name other than three names, guys. It's all three names. TSM, NVIDIA, and AVGO. Those are the only names. Sure, you can possibly find one more that I didn't say right now, but all in all, guys, those are the three names that are really preventing the semiconductor index right now from just purely collapsing, right? So you need to see more broad market participation from other semiconductor names if you want this index to rally similar to how it was rallying back in the months of June, July, and pretty much since November of 2023, right? We have not had that type of bull market. It's been very, very, very rough for semiconductors as of recently, depending which name you're invested in, which is why I continue to only play those top three names, TSM, NVIDIA, and AVGO, because there is no question surrounding their demand. Moving on to IWM Russell. So the Russell having a very good day and a very strong weekly close as a whole, right? Looking very good. Daily uptrend is currently in expansion. Looking for the all-time high break around 242. We'll see if we can get it. One thing's for sure, the bias does remain bullish, bouncing nicely out of our support zone, which was a big one, right? We were talking about this 2020, 2021 area being resistance. It is now support. The bulls reacting nicely from it, and we're getting continuation of the risk on sentiment trade, which is measured by the Russell, measured by Bitcoin as well, right? So the Russell looking very good for some weekly trend expansion. We will see, can they come up and clip the new all-time highs into next week? Well, the bias definitely does lean that way. Moving on to the Dow Jones right now. The Dow Jones breaking above, looking very good. Kind of looks like a more muted version of the Russell, right? These charts look almost exactly the same. They do not look like the S&P, right? The S&P kind of lagging a little bit. The QQQ's lagging a little bit more. Where you see the bullish closes near the highs are the IWM and especially the Dow Jones. So moving very nicely, daily uptrend expansion right now, looking for a break of the all-time highs In the event we do not make new all-time highs and go into consolidation, that is perfectly fine. Who's in control here? Well, it has to be the weekly bulls, of course, right? Beautiful weekly uptrend, looking for the weekly higher lows. If we do not make a new high and consolidate red, this is still just the same leg of weekly consolidation, looking for a higher low. Anything above 41.6 is going to be looking for that higher low, and decent support below us here, about 43,000 down to about 42.5. So the bulls, no major red flags just yet on any of the time frames. Now moving into our smaller sectors, so XLP putting in a little bit of a daily trend change right now, looking very good, bouncing from the key level that I was telling all you guys to pay attention to, right? Weekly consolidation into a big weekly level. You know it's a weekly downtrend, so at that point in time, right? You know it's a weekly downtrend. So at that point in time, you have to essentially look at the higher time frames. Look at the monthly. Who's in control of this chart right here? The monthly bulls are clearly in control. Back testing the breakout zone, right? Prior resistance, breakout, retest, and possibly run. So that is what the XLP is doing. The bulls, now that they have the daily, you can confirm the weekly lows are set, and we might just be looking for more expansion. Utilities, almost the same concept. They did it a few weeks ago, right? Loss of the weekly uptrend into consolidation. You know that the bulls are looking for the monthly higher lows, reacting nicely from the breakout zone, prior resistance, retest, and possibly run. So utilities, not looking too bad, even though interest rates still do remain high on the 10 and 20-year yields. Real estate, all the same, not quite coming down and tapping the breakout zone, guys, but that's because they're not really at the all-time highs anyways. We were into weekly consolidation, looking for a local bottom, and you know you found the weekly local bottom, guys, when after the last weekly leg of downside, you finally get the daily uptrend, and that is what the bulls are doing, now crossing above all of our moving averages again. So leads you to believe that now that we get the cross, could be due for a little bit of expansion. Real estate has been muted, and my favorite name that I was telling you guys on the channel, Vici, down here was a buy. So hopefully some of you guys are able to make some money off of that one. Energy coming alive in the most recent week of trading, admittedly, the last 2 weeks at least, right? So we were taking an eye on this special area, which was, you know, the last 2 years for all intents and purposes. Sure, I'm not including these guys. I'm not including these guys either. It's the general level, right? You see it best on the monthly. This is the general level that the bulls were having some issues with. Now we back tested it, and now we're breaking up. If we close this monthly November candle like this, it's going to look good for some expansion, especially into the Trump presidency. We know that one of Donald Trump's slogans is drill, baby, drill for oil. So I would not be surprised if into Inauguration Day and shortly thereafter, oil stocks are tending to get a little bit of a lift. So it could be a decent little trade right there. Some of the major players that we have to look out for is CVX, bouncing nicely off the lows right there. One of the strongest players in the game right now, monthly trend looking like it does want to expand. Then you also have XOM, which also does look like it wants to expand as well. And that's pretty much it for a sector rundown, guys. So now let's dive into the yields, because we haven't tackled yields in a few days. The trade just remains the exact same, guys, right? As I was saying, yes, everybody knows that the yields eventually will come down because we are in a rate cutting cycle, but there are some everlasting concerns up here. Number one is the bond vigilantes, right? Keeping the price high. We know that the 1 and 2 year and even 3 and 6 month yields will move with the Federal Reserve's interest rate decisions. However, the longer dated yields are pure supply and demand in the markets, guys. If nobody wants to buy these 20-year bonds, then the 20-year yield curve will not drop. It is pure supply and demand. Although we are possibly approaching a local top right now, there's nothing saying that we need to take a drop off a cliff right now. So we need to be very patient with this trade. It could just stay range bound up here until we get through the Trump tariff concerns, the US debt concerns, right? Other countries not buying our bonds, the Federal Reserve itself not buying its own bonds because it's not in a quantitative easing cycle. There are many factors at play here on this yield trade, guys. So I'm not saying there is not a trade here for a yield short, aka a TLT long, but you might need to be a little bit more patient than you previously anticipated, right? Now, moving into the next trades right here, we'll take a look at gold. Gold rallying tremendously off the bottoms here, guys. We shortly approached oversold conditions, getting a nice little move right here. And the last indicator, which is always lagging, is the MACD daily cross. So you could assume that the bulls may have a little bit more juice left in the tank. We've now recaptured these moving averages that we really had not lost this entire time of the rally, right? This is the only big cross below them, most likely in the last, 8-9 months since February. So not looking too bad on gold. If the daily is confusing you right now, just take a look at the weekly time frame, right? The bulls had lost the weekly uptrend, flush of the lows, and now V-shape, the unlikely scenario V-shape recovery by gold. I was expecting more of a slower two-step recovery process here, but the bulls looking like they want to come alive right away, guys. And this is very, very, very funny, right? Both the yields, the gold trade, and even Bitcoin, everything is rallying while the dollar is rallying as well. Explain that one to me, guys, right? So I do a lot of more in-depth macro than a lot of people. I'm aware of all these correlations that you guys might see as well. But sometimes the correlations are not perfect. Sometimes they just break and fall apart as a whole, right? The dollar on a tremendous rally. Gold is an expression of the US dollar. Why is gold rallying? Usually it has an inverse correlation. Try to explain that one. You can bring in tons of different elements, you know what I mean? But you're kind of just trying to justify a confirmation bias at that point. So the gold trade, still a little bit of a head scratcher. Some people argue that it's because people are expecting a resurgence of inflation. Some people argue it's because there's many, many bearish factors in the market right now. Okay, that's a given, right? So maybe people are just protecting themselves and doing a flock to safety trade. Well, then again, explain why all the risk on assets are rallying, why the IWM is at an all-time high, why Bitcoin is at 100K, right? So very bifurcated market right now. A lot of different narratives at play, and we'll tackle that more in tomorrow's video as well, right? Moving on to the Bitcoin trade, as we can see. So the Bitcoin trade doing excessively well, guys. We're about to crack $100,000. Almost did it today. We will see if we can do it over the weekend. The weekend is usually a very bullish period for Bitcoin as a whole. Daily uptrend is clear as day right now. Any pullback from 100K, just looking for a higher low. Anything above 89,000, looking for a higher low for further trend continuation. Looking very good. This weekly candle closes on the Sunday session, so we won't get much information before that close, but it's looking very, very strong. Even though we're in overbought conditions, guys, I hear you, but just keep in mind this, right? This move can stay extended for way longer than you think. Is it a good proposition to be buying Bitcoin up here? Well, I'll leave that decision up to you. The risk reward is not the most favorable, but who am I, right? In the context of a broadening out market, a risk on rally, a market that is discounting all of these factors and moving on further. We'll get into the reasons why, and I will bring up Bitcoin tomorrow, right? But a few of the members in the Discord and a few of you in the comments section have been asking me, is it a good proposition to be buying Bitcoin up here? Is it a good buying proposition to be buying MSTR up here or Coinbase up here or any one of the other different proxies for Bitcoin? Well, the answer lies in your risk tolerance, guys. You know, everybody knows that the risk reward is somewhat unfavorable. In terms of a long-term duration asset, I'm holding Bitcoin. I have very high long duration price targets, but I'm pretty sure some of you are wondering, where's the cycle top and is there enough meat left in this trade to take the trade? Which is where you kind of have to make the educated guess for yourself. I'm not going to hold you back, and I'm definitely not going to be the type of person that's going to call 100K is going to be the top and then we're going to come all the way crashing back down there, right? Nobody knows, guys. I don't know. And if people tell you that they know with certainty, you know, take that with a grain of salt, guys. Nobody has a crystal ball. You have to follow the narratives. And the narratives at the current time is that there's a lot of people being onboarded into crypto. I have been saying this ever since back here. Here I was saying, even though Bitcoin is near all-time highs, nobody cares. Nobody's talking about it. Up here just a few short weeks ago, Bitcoin was at 88K, 89K. Nobody is talking about it. Now that it's been close to 100K in the past few days, 3 people that I have not heard of in my crypto environment, 3 people that I've not heard of since the depths of the bear market back in 2022. These people have all messaged me in the last 2 days asking me, hey, Will, Bitcoin's almost at 100K. What's happening? Is it a good time to start playing the altcoins and stuff like that? Guys, that is late innings, right? I'm not saying whether we're in the 7th, 8th, or 9th inning. If you don't know baseball, maybe you know soccer, football, things like that, basketball. We're in the second half, right? As of right now, we're in the second half. Whether we're in the 3rd quarter or the 4th quarter, the last 2 minutes of the game, that nobody knows. But it is definitely second half when you start seeing things like that and you start seeing people on TikTok starting to go away from sports betting, go away from traditional stocks, and now everybody is focused on crypto, Bitcoin, meme stocks, you know what I mean? Stocks that haven't rallied in the last 2-3 years that are now putting in ridiculous percentage gains. you know that you are in the second half of the game right now. So if you do choose to position, understand the risks, right? And just be diligent on your take profits and do not invest more than you're willing to lose. In terms of the other altcoins, well, they're doing exactly what I said they would. Very mixed bag. Even though Ethereum's coming up, Ethereum is nowhere close to the all-time highs. And the same thing can be said with many other altcoins. Cardano's been having a tremendous rally. Close to the 2020 highs? Not even close. Aptos, not even close. Arbitrum, not even close. Avalanche, not even close. BNB, they are close. I'll give them that. Dogecoin, tremendous rally. Meme coin frenzy, right? But what are we looking for here, guys? Dogecoin is currently $60 billion. What are you looking for here? 100 billion? Doge to $1? What is that? Not even a 2x, right? Or just over a 2x? You can make a 2x in the stock market, guys. The money's not there, right? Maybe you think it's gonna go higher, 150 billion, right? What is that? Not even a 3x? That's not the juicy crypto gains people are looking at. Polkadot, nowhere even close. Phantom, nowhere even close, right? You can name me a bunch of other altcoins I'm not going over. Link, nowhere even close. Magic, I don't have Matic on the chart, nowhere even close. Litecoin, nowhere even close. You guys get any idea? Solana, yes, a lot of demand for it because it's meme coins, but you can see the utility coins, right? Some of the utility coins not doing what people were expecting them to do. Curious, where's the outperformance currently in the crypto markets? It is memes. There is a clear meme super cycle happening right now because in 2021, people were entering the crypto market. There was a lot of free money going around everywhere. A lot of VCs investing. The interest rates were at zero, right? Stimulus checks everywhere too. So VCs were plowing money into all of these L2s and utility coins, right? Gaming coins, DeFi coins, right? DPIN coins, so many other different coins, right? Everybody was piling into them. This is the technology of the future. All these things have something in particular. They're faster than Bitcoin. They're cheaper than Ethereum. All different things. And now you see that at this point in the cycle, nobody cares about that anymore. People were sold a dream. It didn't happen. Turns out the tech is not as good as people were anticipating. Well, the tech is good. You know what I mean? But do people care? Well, some people might care, but obviously, a lot of people care less than they did in 2020 and 2021. They were not focused on meme coin trading. This was late stage cycle bull market expansion from the everything asset rally of 2020 and 2021. People pivoted into Bitcoin. Then when the gains were no longer being had in Bitcoin and Ethereum, they pivoted to everything else. Everything else went to the moon. And then everybody got rug pulled in 2022 during the asset bear market, inflation, interest rate hiking cycle, etc., right? So nobody invests. I said this back in the day, guys. I said this back in the day in my own crypto groups, circles, and with my friend circle as well. Why do people actually invest in crypto, right? I'm pretty sure if you guys try to onboard your friends to crypto, you're not talking about the technology behind Phantom. You're not talking about how AVAX is a great coin for gaming ecosystem purposes. You are not talking about the tech. Do not lie to me. Do not lie to yourself. You are onboarding yourself and you're onboarding your friends and family into the crypto market because of the juicy gains. So if that's the case, if you're wanting the gains and you don't really care about the tech, well, you may as well follow the money, guys. And where's the money been? The money's been in meme coins. The money has been in meme coins. It is clear as day, and as clear as day, especially on the Solana blockchain right now. So just keep that in mind. I'm not saying that we will not have an altcoin rally, but I'm pretty sure in saying that everybody with Bitcoin breaking all-time highs, everybody here was saying when Bitcoin breaks all-time highs, you're going to get the altcoin rally of the century. When Bitcoin consolidates sideways after a massive rally, you're going to get the altcoin rally. Where is the altcoin rally? Where is it? I'm still waiting. I'm not saying I don't have positions in them, but I'm still waiting, guys. And you guys are probably still waiting as well, right? So you have to follow the money. Have to follow the money, guys. I'm not saying when Bitcoin consolidates from here, can the altcoin rally happen? Possibly, but you need to see Bitcoin dominance come down. And Bitcoin dominance coming down is going to be a byproduct of, people just want to see this chart going down, but they don't know what this chart means. Bitcoin dominance means how much of a percentage of the total crypto market cap of all coins in crypto, how much does the Bitcoin market cap represent out of that? And right now it's standing at 60%. There's only two ways you make this chart going down, right? One of which is Bitcoin goes down and everything else stays flat. At that point, Bitcoin will have a less and less percentage of the total market cap. It's just like in how much does Microsoft represent of the S&P? It's the same analysis, right? So moving on further, in the event that Bitcoin comes down and everything else rallies, then this will come down and then you'll get a clear indication. But as of right now, everything has been correlating with Bitcoin. When Bitcoin goes up, everything goes up. When Bitcoin goes down, except for a few days here and there, this entire list goes down as well. So we are not seeing people pivot to altcoins because I think people are smarter this time around. They're not being sold a dream from the metaverse. They're not being sold a dream that the technology is good and that billionaires will be flocking into this technology and companies will be flocking into this technology by the hundreds of thousands, right? So you got to follow the money. You got to follow the narratives. So that is my longer than usual take on the crypto markets. Now moving into big tech, shall we? So big tech, Apple up 0.59%, but still Apple's been having green day after green day after green day. Has it actually done anything? No, we're still in the context of this resistance range, 230 down to about 225, and the all-time high, if we do get the daily uptrend is nice right now. If we get a breakout, I need to see a clear breakout of the all-time highs because until that point, we are still range bound. Even if we've been doing nicely, still range bound. And if Apple just has a few big red days with the rest of the market, we will be right back down here at the lower end of support, 220 down to 215 in this tightening range. So in the event Apple comes back down here, very simple. I'll be playing some short puts around the 210 down to 207 range. And if Apple gets the breakout, I'm not playing it here. It's equidistant risk reward. There's as much reward to the upside before resistance as there is risk to the downside of this level. It is a 1-to-1 risk to reward trade. So I'm not playing the Apple breakout right here. If I want to play the Apple breakout, I'm going to wait for one of my favorite setups. The breakout, retest, and run. I want to see the bulls claim the level. You can argue, yeah, but Will, you're going to get a better price here if you buy here and then this happens. Yeah, but you don't know if this is going to happen, right? What if it goes down here first? Then I win. You know what I mean? So I'm willing to pay to wait for confirmation that the bulls want to claim a level, then defend this level, and then go for the daily uptrend rally, all right? So hopefully that makes sense. Moving on to AMD right now. So AMD, similar. AMD has been roughly sideways for the past 4 days with the rest of the semiconductor industry. Daily downtrend is clear as day. The bulls are trying. They're trying to put in the daily higher lows to go for the daily uptrend. We will see if they can get it. But however, this bounce on the daily is relatively weak. Let's call it as it is, right? Relatively weak bounce, 38.2 bounce, which gives the bears a beautiful opportunity to either retest the lows or flush the lows. Why? Because they're so close to the lows, guys, right? They don't need to, it's not as if we're up here and the bears need to put in a boatload of money to drop this one even further to the lows. They're literally right here. So the probabilities of the flush are very high right now. That being said, we are in a support zone, 141 down to 128. So not looking the worst. I will continue to play this way in the following fashion. Loss of all weekly momentum right now. So in the event we just grind a little bit lower, I will be looking to write short puts under the market down here, 125, 120, but I need to get a good price because if not, there's nothing that actually entices me to play this for short puts. Why would I play AMD short puts for 130, right? When I can use the exact same capital and play a stock that Wall Street likes, that everybody likes, with a lot more momentum and a lot better volatility, such as NVIDIA for the same 130 strikes. Well, I'm going to play NVIDIA every single time, right? So hopefully that makes sense for AMD. I have nothing against the company. I actually think they'll do quite well in 2025, but the sentiment around the company right now and the sentiment around every single other semiconductor except for AVGO, TSM, and NVIDIA right now is just very, very poor. So you have to recognize things for what they are and just play the volatility in the event that these names interest you. I'm all for building a little bit of a position down here on AMD. You can argue that these are the actual lows, but until we get some confirmation by the bulls, and until we see them try to take back some of this weekly and get a weekly uptrend, I am just not convinced. I'm not opposed to having some debit spreads here. As a matter of fact, indeed, I do have them. I have a position, right? So I am in, but I'll just say it as it is, right? Cautiously optimistic at best. Moving into Amazon. So Amazon daily downtrend as well. Yesterday, the EU news did not help them. It actually broke the level of the 200 psychological, and now it appears as though we want to drift lower. So the Trump election victory, the earnings into the Trump election sent this one higher. We thought we were going to get the lasting breakout. Unfortunately, the daily bears had something else in plan for us. So where does that leave us, guys? Daily downtrend into a big push. just zoom out. When in doubt, zoom out. Who's in control right here? The weekly bulls are in control, looking for the weekly higher low, anything above 180, looking for that weekly higher low for further trend continuation. Down here, 190 down to about 188 is going to be the likely area that I will continue to play short puts. As a matter of fact, I have some right here. We have the 192 short puts for next week, so we'll see. Give me the shares. I want the shares down here because I believe Amazon will have a very nice end of the year Q4 into early the next 3 months of the approaching year. Amazon is now focusing on profitability, focusing on free cash flow, focusing on net margins, expanding their AWS business well, the advertising business well as well. Look at this EPS ramp. Look at this revenue ramp at the next 4 years. And most of the analyst price targets, all of them, are decently above the stock. If we were very close, I wouldn't be so bullish, but just goes to show Amazon does have a fairly decent price right now, and even the valuation is really not as bad as people think. It's actually quite fair. So we'll keep an eye on how Amazon develops over the course of the next week of trading. Moving on to Google right now. So Google, again, getting plagued today, 1.58% today. So there you go, right? As a matter of fact, Google, daily downtrend, giving it everything back with the Department of Justice lawsuit. I went over this yesterday for about 6 to 7 minutes. So if you did not see my take on the DOJ lawsuit news, just go back to yesterday's video, go in the description, click on Google, and I spent 6 minutes giving a expanded thesis and my take on the matter. My short opinion, if you haven't seen it, is I still do remain bullish. That's just me. If you're not willing to take the risk, that's perfectly fine, but that's why we have risk to reward profiles. Every single company has risk. At a certain point, the risk reward profiles either tilt to less risky or more risky. In my opinion right now, because of the valuation of the company and how much Google makes on a yearly basis, in spite of these headlines, I am still fairly bullish. So I will still be playing these dips. Maybe I get burned. We will only truly know when we give the bulls a chance to recover here. We get more information from the DOJ, more information from the Trump administration when they come in, how they're possibly going to maybe intervene in this situation. There's a lot of maybes, right? So at this point in time, all we can do is wait for more data. That being said, daily downtrend into weekly consolidation. The bulls still holding on to the weekly uptrend, anything above 161, looking for a higher low for further trend continuation. We will see if we get it or not, but one thing's for sure, I will continue to play short puts in this area down here on Google because I do believe that it's a very nice area of support, and the valuation of this company is extremely, extremely, extremely cheap right now. And the fundamentals of the business, that is something that everybody can agree on. Yes, there is headwind risk right now, headline risk from the DOJ, but I'm sure that one thing that everybody can agree on is the company's fantastic fundamentals for now, and fantastic net margins, fantastic Google Cloud numbers, advertising business numbers, search numbers, even though they may have to sell off Google Chrome. We'll see, guys. Still speculation. Fantastic free cash flow. No problems with Google at all. Moving into Meta right now. So Meta as well, right? Down about 0.7%. Meta has not had a good week. Meta has not had a good last 2 months, to be quite honest with you guys. Now, the daily uptrend is not in motion. As a matter of fact, that isn't under control by the bears right now, looking for the daily higher lows to try and set up for the trend change. But the bears are very close to the lows right now. They do have a chance to roll this one over further and send us into further weekly continuation of this weekly downtrend. When in doubt, zoom out, guys. Who's in control right here? It is the monthly bulls, looking very good. Monthly breakout, retest of the possible previous all-time high. So I will be sitting here with some orders in the event they come back down here, fill the breakout right area of the previous all-time highs, the good old breakout, retest, slow retest in there, and run could be looking like a decent setup for some Meta shares. The valuation of Meta is very decent, and the fundamentals, we covered them on earnings, are fantastic. Moving on to Microsoft right now, nice end of day rally, but Microsoft has done nothing for the last 5 days. Let's be honest, reacting nicely from this 200 daily moving average. The one thing that I can say is I brought this up a few times before, every time Microsoft dips into the 200-day moving average or below in the context of an overall bull market, this is 2022. This is a multi-asset decline cycle, right? Interest rates were being hiked at the fastest pace in the last 20, 25 years at this point in time. Inflation was out of control. Supply chains were broken, et cetera, et cetera, et cetera, et cetera. Companies were guiding for lower and lower EPS guidance as the supply chains were broken and whatnot. So, you got to take this one with a grain of salt. But in the context of a bull market, right? Every single time, this is COVID, by the way, every single time we encounter the 200 daily moving average, usually it's a good buying proposition. Moving out to the weekly, every time that we encounter the 50 weekly EMA, usually it is a decent buying proposition for Microsoft if we get close to or touch and break it COVID was another good example. 2018 interest rate tantrum cycle when Jerome Powell started increasing rates to cool off the economy. That was another good buying opportunity. All the way back here in 2015, 2016, a few touches, good buying opportunity. Can it go lower? This was a couple different factors going on here, but as a whole, guys, I just want you to derive a general rule that usually in the context of bull markets and in the context of Microsoft ever improving its fundamentals, which it is, ever improving its fundamentals, right? It would be one thing if the fundamentals were getting worse, but the company's improving fundamentals. So usually in the context of improving fundamentals, decent valuation, little bit rich, but Microsoft always trades a little bit rich. Usually a good proposition to be putting in some bids for this stock. So that is how I'm playing this one, guys. In the context of being trapped between two ranges right now, overhead resistance 425 to 435, down below support 405 down to 395. Very simple. Come lower down here. I'm looking for calls, looking to write short puts as well. And you come up into this range right here. Probably not good for a breakout trade. I would like to wait for a confirmation, the breakout, the retest, and the rally trade for the confirmation signal in the event we make our moves into that higher direction. Moving into Netflix right now. Look at this weekly candle close on Netflix. Fantastic day, flat on the day today, but still beautiful daily uptrend rally, guys. If we do come into consolidation, because we are admittedly getting very high on the RSI right now, it's 82. And if you look back on Netflix, this is not NVIDIA. It does not usually stay overbought at these levels for a very long time, right? Usually it just pops into there and then pulls back. So in the event we get a pullback, looking for a higher low, anything above 809, looking for a daily higher low, possibly a retest of the 12 EMA, which should be curling up to the 850, 855 range, looking for a daily higher low for further trend continuation. And if the bulls give back too much and Netflix goes into the first daily downtrend in a very long time, what are we looking for on the higher time frames, guys? You guys should know this by now. Looking for a weekly higher low for further trend continuation. No red flags for the bulls other than slightly overbought on the weekly, slightly overbought on the daily, but who controls the long-term time frames? Definitely the bulls. Moving on to NVIDIA right now. NVIDIA, not a very good close to the weekly candle, that's for sure. Daily, still trapped, right? Cannot get the daily uptrend breakout just yet, but also the bears cannot get the absolute flush either. So trapped between two levels, guys. The 149.71 need a bullish close above this to say the bulls are really in control of the daily uptrend and looking to expand on this weekly time frame as well. And to the downside, of course, need a break of this to confirm a daily downtrend and to confirm that weekly consolidation is going to go a little bit lower. And if it does, probably coming down here, 130, 125 is the next area of support. Well, I'll be looking to bid a little bit of this stock. And if we fall through that one, well, 120 down to 115 is the area that I would like to go a little bit more heavy on this stock, because that would be a pullback from the top to the bottom there, 20, 25% in the context of an overall bull market. Not a bad proposition to be buying NVIDIA when they have those good old 20, 25% pullbacks in the context of an overall bull market and in the context of them just having earnings, which we covered. Very good numbers, reiterated supply is very good. Once again, the reason that NVIDIA is not flying right now is because they're a victim of their own previous success. The comparable numbers were just too good, and it's tough to keep raising and raising and raising the bar when the bar is already set so high. But I'm very bullish on this company, guys. So that is how I see this one. Moving on to Tesla right now. So Tesla as well, up about 3.8%, looking very good for that trend expansion. Tesla did nothing all week before today. So we were keeping a look on that. The bias was still bullish on this one for daily uptrend continuation, guys. Well, this is the daily uptrend continuation, right? Why? Well, because who's in control here? The monthly bulls are quite obviously in control, and the weekly bulls are quite obviously in control as well. So when you have pullbacks, until that gets disproven, until the bears set a daily downtrend up, right? Usually all of these consolidation phases, like such as this one, are for continuation of the expansion. And today was no different from, reaching the 360 highs that we had a few weeks ago and moving into the possible 400, 410 area of resistance. Now, this one has left a lot of people in shock. The Bitcoin trade as well. A lot of things, guys. The Palantir trades, all deep Tesla, Palantir, Bitcoin. They will be some prime examples in my video tomorrow, right? As to what's happening in the markets right now. It's very, very funny how people shift on an instant, right? Back down here, Nobody wanted Tesla. And even myself included. I'll be the first to admit I was hesitant to play Tesla up here. And now everybody wants Tesla. I am not screaming at the opportunity for buying some Tesla right now. I'm waiting for pullbacks and willing to play it because you kind of want to wait for proof, right? You want to wait for confirmation that the trade is good. And that's completely understandable. But the sheer shift in this company from down here to people saying it's finished. See, it's just a car company, right? It's overvalued. The forward P is X. The PEG ratio is X, right? They're going to hemorrhage money for X reason. They only make money because of the EV credits. And when those EV credits go away, Tesla is finished, right? All these arguments we've heard before. And now the haters are in absolute disbelief. And some of them even have turned bullish. Shout out to a few people on YouTube. Not going to say any more, but there you go. So a few people now feeling the FOMO, wanting to pivot bullish at the tops, completely normal behavior in a somewhat late stage cycle rally. The case of the everything rally, Tesla getting a lot of love and just leaving the haters in disbelief, right? It's perfectly fine. I mean, I haven't added to this position. I haven't taken any swing trades on this position. I do have some long-term shares that I never sold, and my stance on the company has always remained the same. If you are a Tesla shareholder, you should not be investing in it for the car business. It's because you believe in the robotaxi business, the Optimus business, the expansion of the energy business, everything else than the car business. The car business is a nice bonus, and it's what they do right now. So the numbers of the car business matter a lot right now, and I do agree. But if you're a long-term Tesla shareholder, you are, let's just say the horizons that you have your eyes set on are much larger than just being the most profitable EV manufacturer in the world right now. Of course, right? In terms of the price action, daily bulls remain in full control. I gave you the resistance levels. And in the event we pull back, guys, into some more daily consolidation, if we pull back lower, I will be looking to sell some short puts, 290 down to 280, because we will be looking to ride the Tesla bullish wave. I do think it continues into the Trump inauguration and possibly early into 2025 as well. This one is definitely not moving because the fundamentals have improved, and suddenly in the last 3 weeks, people are rushing to the Tesla dealership to buy Teslas. No. This is hype cycle, this is momentum trade, and everything else in between. So hopefully that's helpful for that one. And Palantir, another good example of the fact that, we had been discussing Palantir a lot on the channel, but the sentiment on the stock was relatively mixed. I was buying Palantir. Well, admittedly, my first positions on Palantir were over here. Over here, people thought it was the best stock in the world. Down here, people were clowning every single YouTuber that had heavy size in Palantir back then. They were getting clowned back here. Imagine investing in Palantir and thinking it's the business of the future. Clowning everybody. Then oops, comes back to break even. Yeah, but you guys haven't made any money in 3 years. You're just back to break even, right? Palantir, the valuation is too high. The valuation is too high. The valuation is really high. The valuation is sky high. Who's still buying here? The valuation is ridiculous. Who's still buying here, right? It's funny how the mindset shifts. And now everybody in the chat are AI experts. This play was so obvious. Palantir is some of the best AI technology in the world. The play is obvious. How did you guys not buy here at a 4 peg at 45, expecting this? It's obviously going to $1,000, obviously. And I'm saying this as a Palantir shareholder with an average cost in the $11 range. I'm very happy, guys. I'm in. It's just you have to take notice of what's going on in the markets right now, right? All of a sudden, everybody is an AI expert. All of a sudden, nobody's bearish on Tesla anymore, right? Even the haters are coming back and building long positions into this company. It's very funny how these narrative shifts work in the market when the stock price is going up and when everything is green, right? Very funny. So you have to take notice of this. The company, I still remain as a Palantir shareholder myself. We have to acknowledge that the valuation is a little bit high. The momentum is very good, and this one is just moving off of momentum. It is long since decoupled from its fundamentals, right? Pure momentum trade, and there's nothing wrong with that. Don't get me wrong. There is nothing wrong with momentum trading, guys. As a matter of fact, I do it myself. Do you not see the IWM call options in the portfolio right now? Do you not see the leaps that I have on Amazon trying to play the breakout, right? The leap options on Google, the leap options on Square that we're almost up a 3x on right now, right? Like you guys see, do you not see the SOXL calls, the N phase calls as well, all the way up here, right? Like I'm in this one too, guys. There's nothing wrong with momentum trading at all, so long as you recognize what you're doing, right? And so long as you don't overcommit to the trade. So pay special attention to that. As I said, I'll be using a lot of these stocks into an example for tomorrow as to why, despite all of these things, do we have these ridiculous rallies and the indexes are not going down and nobody seems to care. It must be frustrating, right? Very frustrating being on the sidelines in cash or being short and having a very logical bear thesis and seeing everybody around you print gains even when it seems like they have no idea what they're doing. Some people that may have never invested in stocks just got wind that Palantir was rallying. All the YouTubers are covering Palantir. They bought all in their portfolio at 45, not even having any concept of valuation. And now they're up more in the last 2-3 weeks on their entire portfolio than you might be up in the entire year. And it must be frustrating, right? And I do agree, but there is a reason behind this, guys. And you guys that are also slightly bearish or slightly reserved or have cash on the sidelines, you guys, funny enough, you guys, and I'm myself as well, I understand the bear thesis. I understand all these points. I wrote them down myself, right? I acknowledge them. But I'll include myself in this, we are also the reason that the market refuses to go down until every single one of us gets tired of seeing these people make gains, even though it seems they have no idea what they're doing, until we get tired of it. And every last one of us pivots bullish, or most of us pivot bullish and give up on the bear thesis and go full bull, and you see it in the media as well. Until that time comes, guys, we will continue to be upset and upset and upset by the bull market rally right now, which is why I say it is the most hated bull rally possibly ever since 2021, at least, right? Because that one was pretty hated too. Overvalued, 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 bubble, 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 bubble. And apparently it doesn't matter. You just keep being on the sidelines and everybody around you keeps printing gains, and it's frustrating, isn't it, right? So we'll get into a lot of that tomorrow. Palantir technicals, let's just have a quick look. Who's in control here? Daily bulls still have not lost the level. If you find a flush below 58.70, it will be daily downtrend, and we will be heading to weekly consolidation. As of right now, no signs of that. Even though we are weekly overbought, even though we are expensive, it does not matter. Price action is king on this stock right now. Just watch the levels, watch the price action as it evolves. For now, the long-term bulls are in absolute full control of this chart, right? So moving on to a few other stocks that we have to take a look at, guys. The high flyers, right? Similar in tomorrow's video. I was one of the only ones. Well, there's a few YouTubers, in all fairness. There's a lot of people talking about how good of a deal SOFI was down there because the fundamentals made sense. The company was cheap. But now everybody now is a SOFI expert. Everybody wants to buy SOFI up here. Will, is it a good idea to buy here into resistance? Can I take the risk? What changed in SOFI in the last 6 weeks of trading? We covered their earnings. Did the company magically find 10x the source of revenue? No, it's had the same revenue profile as well. It's been now profitable for the last 4 quarters in a row. That's not changed. That was one of my theses for back here as well. What has changed? Has the company found new revenue verticals? Has the company expanded EPS at a more rapid pace than analysts anticipated? No, nothing has changed. You can go back to my videos. I cover them every single quarter for the last year. Nothing has changed. Still the same expansion curve. So why does everybody want them now and nobody wanted them back here? Curious, right? So as of right now, SOFI once again, very overbought on the daily, on the weekly, excuse me, very overbought on the daily, but people do not care. Price action right now is king. Hype and momentum are king. Retailer loading the boat on call options, guys. The market makers have to delta hedge. It leads to more and more of a squeeze. And until you see confirmed price action daily downtrends, you will not get into weekly consolidation just yet. So play the levels, play the price action. You get the higher low, you go for the expansion. Well, you can enter the trade. The trade is here. The stop loss goes here. And if you get taken out, perfect. You get the daily downtrend. You know you're going for weekly consolidation, and you can try and find some daily lows with some of the reversal techniques that I do show on the channel as well. As of right now, SOFI though, looking extremely strong. And it goes the same for stocks like MSTR. Same principle, price action is king right there, guys. Just watch the higher highs, higher low patterns, establish your support ranges. Wait, when you get the daily pullbacks like this, you wait for the hourly confirmation that the bulls are back in control. When you have that, you know the daily rally is back. You can set a stop loss under the most recent higher lows, right? Have a defined stop loss level, have defined take profit levels as well. MSTR is the same. Coinbase is the same, right? Robinhood is the exact same as well. I was covering the stock back here. I was playing a lot of short puts back on this stock. Why does everybody want it right now? It's being bunched up with the Bitcoin trade as well. So Robinhood, overvalued right now. The valuation is out of whack on this stock. Very expensive right now, yet people still just want to buy. Why wasn't everybody buying back here when the stock was extremely cheap? Why wasn't everybody buying back here at 16? Now everybody wants to buy the stock, right? Same goes for many other plays, the IONQs of the world. Nobody wanted this stock except for a few of my subscribers that put in the request when I do the stock market, when I used to do the subscriber request, ticker request, right? Somebody said here, and I was saying this is a very nice descending wedge, guys. And when you come into a descending wedge with a big support level, this could be a great entry level for a breakout trade. This one is carried a lot higher, of course, but the same principle, guys. The valuation on this one is also out of whack, but it is trading on pure momentum and pure price action alone. So pay special attention to the price action levels, guys. On a lot of these names, they are key. Square as well. Square, I loaded up the leaps down here. I was saying on the channel how undervalued this stock was. The thesis was not a Bitcoin carry trade. The thesis was actually the company's fundamentals. Now, they have been bunched up with the Bitcoin trade so far, and the Bitcoin trade, not gonna lie, is probably a good portion of the reason of the rally, but the fundamentals of the company are even here still cheap. I like Square going for the breakout right now, possible retest, but as of right now, the daily bulls are in full control. You can see no loss of the daily uptrend. Until you see a loss of a daily uptrend, that is when you know we're going for a weekly higher low, and then we may look to bid the retest of these tops up here, retest and possibly run off of that weekly consolidation. So I'm not going to bring in many more examples than this. I think you guys get the point. If you're looking at a stock that has run a tremendous amount, it is not a bad idea to position in them. I'll do a lot more analysis on these types of stocks tomorrow when we go through that video of why the stock market keeps going up and why the risk on bulls are getting very greedy right now and how we can possibly position and play in these cycles in many of these names. So hopefully you appreciated that segment on, on these specific stocks that a few of you have been asking in the comment section for over the last few days. So now let's take a look at a quick little glimpse into the plays that we made over the course of the week and the plays that we have remaining. So in terms of the week, guys, very good week. Our wheel wins were all very good. As you can see, I did cover a few of these on the channel over the course of the week, but we had some good wins on Google, the 172.5s. We were able to close those early. Elf Beauty as well, despite their mishap with the short seller report, we were able to get out of both of these contracts at very nice wins, the 112 puts and the 90 puts as well. The NVIDIA puts as well, after earnings pretty much, we did very well on those, the 135s too. So those were looking very good. I reallocated the funds to the current Amazon trades that I have right now. We did have 3 trades that we got assigned last week. And as a matter of fact, we got called away on all of these trades. So SOXL, we got a 2750 sale. We had covered calls. All of these we were in last week, got assigned and out in one single week. Now, you could argue, why did I not roll these calls? There was some good premium to be had on the rolls, but I'm very happy in getting the buying power back and going shopping for new opportunities, because in the event we get some drops on these next week, they're fairly close to our assigned prices anyways. If we get some drops, I might be able to write either the same strikes or even one strike price lower and get the exact same premium or better than I would get on a covered call roll. So this is just me recapturing a lot of the buying power and maybe going shopping for some other high conviction plays, such as maybe another Elf Beauty, maybe more Enphase, maybe more NVIDIA, things like that, right? So I just took them off the table. So we get called away, 2750 minus 2612 cost, 5% ROI on the SOXLs, ON Semiconductor, 2% ROI in 1 week, and the Enphase is 2.2%. You can see all of those trades right here. Here are the Enphases, 100 shares, the $63 call called away. Down here is the XOXL, SOXL as well, 100 shares. Here's the covered call. These will now be called away. And the last one, ON Semiconductor, 66 assignment price. The covered calls are right here and now also called away. So hopefully those make sense as well. Directional trades, we did very well. We closed one of the Square Leap contracts now that are up roughly 3x, over 3x right now. As you can see here, the gains on these contracts are quite substantial. Now we got in an average cost of $5.55. They're now trading for about $18. So I took one out, right? Because what is the cost basis on the rest of my calls? 555 times 3, which is roughly 1650 in terms of my cost that I still have remaining. So I closed one of the contracts, just to get $1,500 back. That way I'm riding the rest for free. That was a 2.7x at the time of the close. BRKB, you remember me telling you guys about this trade right here, the BRKB call debit spreads that I had? I didn't have that much. I only had 2, but I've been talking about this one a lot on the channel recently, and I was saying financials look very strong, and my favorite financial trade, I was talking about it down here, right? Favorite financial trade was Berkshire for the expansion. Now we're getting the expansion, so those did very well. Closed 1 out of 2 contracts. The next one will be closed near the all-time highs. SMCI did a cheeky little SMCI trade in the right before the NVIDIA earnings were released on the NVIDIA earnings session, of course. SMCI bought 100 shares in the after hours, 26.29. And the very next day, I wrote a covered call when they popped up higher at 28.5. So we collect the difference of these two, which is roughly $200, right? Between the cost of the shares, the covered call price, and the call credit premium received. That was a very easy 2-day trade for about $317, 12% in just 2 days. And then we had the QQQ calls, which was a directional play, 15% in 2 days. I got them last Friday when the markets were selling off in a big way, and we were able to get out of those in pretty much the Monday session, pretty much, or was it Tuesday? One of the 2 days. I think I showed you guys this trade anyways. Then the earnings trades. You remember, this is my 2x standard deviation strategy where I write short puts 2 times below the expected move into a weekly support level for earnings. Now, most of these were wins, but I told you guys on the channel, was very transparent. We had one big loss on target, and that is why when I present you guys the wheel strategy in my top 5 options videos every single Sunday, I tell you guys, do not play earnings. If you choose to play earnings, you are taking a heightened risk. Yes, you can make more money, but one big loss can remove a week or even 2 weeks worth of gains. As you can see, if I scroll back in the Discord, the week prior, we had decent earnings trades there. A big week, the week prior, this was like $615 in total premium. And the weeks prior as well, these were tiny losses, $11 loss, $3 loss, the rest wins, and the list goes on, right? I didn't put them up here, but up here we played them as well. I started including them, even though they're in the lottery section, just for clarity and recap purposes, so members know what's going on and stuff like that, right? So the target, $642 loss, guys. I explained this one on the channel, but if you haven't seen it after that session this week, right? Target, very, very simple. Close the loss. We had a 2 standard deviation move. While I went twice the expected move prior to earnings, I was sitting here at the 131s into a deep level of 2 years worth of support, 2 times the expected move, and it was not enough. We opened up here. I closed them literally 5-7 minutes after the open, and good thing I did, because now we would be significantly lower. Can it recover? Sure, but I just do not have conviction. The purpose of these earnings trades is not to possibly, if it goes wrong, stay in the stock and wait for a big recovery. If they gap down 20%, guys, usually it's because there's something larger at play, right? There is an execution risk to the company, right? At this point in time, it's very rare that they find a local bottom soon in the event of a big drop after execution risk to the company. Nike, number 1. Starbucks, number 2 prime example, happened right there. And you can see how long it took for any form of recovery. We took a very long time. Took Brian Nickel leaving Chipotle to join Starbucks to actually turn this one back around. Crazy, right? Look at Disney as well. Execution risk on some of their earnings and just constant downward motion. So when I see a stock that I do not have high conviction in, I have much higher conviction in Amazon, Walmart, and Costco. I was just playing this one for the earnings. It wasn't necessarily high conviction. When there's a stock and I take a loss and it's not high conviction, I just cut the trade. I'm not married to any of these positions. I realize them for what they are. They are just an earnings trade gone wrong. So take the lesson from me. Either do not play earnings to begin with, or if you do, be very diligent on managing your losses. Understand what happened through the earnings. Do not get overly bullish and thinking, I hope it will come back. Hope is not a good strategy, guys. You have to manage the risk and you have to cut the losses very quickly. If Target would have came back immediately right after this earnings, the very next day, in the next 2 days, I don't care, guys. I am not in the business of praying for a recovery when the company cannot acknowledge that it has execution risk. It blamed higher expenses and weakened consumers on the hurricanes. Nobody else blamed on the hurricanes. Walmart didn't blame anything on the hurricanes. Costco didn't blame anything on the hurricanes. Amazon didn't blame anything on the hurricanes. But Target, knowing that there is an execution problem here, we covered their earnings, they chose to blame it on the hurricanes rather than analyzing the company, such as it took Nike a few quarters to realize they had an execution problem. It took Disney multiple quarters to realize that they had an execution problem as well. after this big drop off, right? It took Starbucks a long time before realizing they had an execution problem as well, right? So if a company is not yet acknowledging that they have an execution problem, well, it's maybe not best to be in that company hoping for a possible turnaround catalyst, hoping the market is wrong, and hoping that Wall Street is going to bid and save your bags, right? So that's just some logic behind that one. So I'm always transparent, guys. The wins, the losses, I show you guys everything. I show this list every single week, just to be transparent with myself and with the members as well. That's because I figure there's not enough transparency, especially towards losses in the YouTube community, right? Then there was some hedge trades for NVIDIA earnings. So NVIDIA being the biggest volatility catalyst that we had for the week, arguably remaining until the entire rest of the year. Trust me, guys, if NVIDIA would have went down 8 to 10% after their earnings, such as they did last quarter, right? You saw what happened last quarter. NVIDIA had tremendous numbers from NVIDIA. And what happened? Earnings resulted in the subsequent weeks being a 20% decline, and the index is taking an absolute bath. SPY going down 5-7%, QQQs going down 5-7-8%, and more, right? So there was a very big risk to the NVIDIA trades, and I positioned with some hedges a few different ways. Number one, I covered every single one of these call options that I have in the portfolio. The Google leaps, the SOXL leaps, the IWMs, the Amazons, the Squares. And we did some NVIDIA trades as well, since we were playing earnings with the short puts, 2 standard deviation trades. I wanted to cover in the event that they missed, and it resulted in an overall market narrative of the AI trade is over, semiconductors are over, everything's overvalued, and we go into a 5-7% correction on the indexes immediately. There was a lot of risk on that trade. And keeping in mind that I'm running, $20,000 roughly of these call options and a long portfolio that has about 100K in exposure across all positions, you kind of need to pay for insurance sometimes when you understand those risks. So we did pay for insurance, and we didn't need to use the insurance. Whenever you pay for insurance for your house burning down, you're not expecting your house to burn down every single month, are you? You pay for car insurance, you're not expecting to crash your car every single month, are you? So the fact that we lost on these hedges is a good sign. If these hedges would have been up, the entire rest of the portfolio would have been hemorrhaging a lot of money as well, right? So you got to take these for what they're worth. I covered, we went in for these for one day, and the very next day we covered. Some of them we won, some of them we lost, but one thing's for sure, I closed these while we had the sell-off Thursday morning. And thereafter, since Thursday morning, you can see the markets have rallied. Everything has rallied except for Amazon and Google because of the headlines, of course. But everything has come out of the Thursday session lows. And my portfolio, as a result, is a lot higher, even in spite of losing roughly $410 across all of these hedges. So that being said, that's just the way that I played those hedges to be fully transparent. So the target loss and the hedges kind of taking away from the profits that we had this week. But the regular strategy wheel, we crushed it. The regular directional trades, we crushed them. The earnings trades, one little mishap, but then again, I'm not making any excuses. We know full well that it's a very real possibility. And the hedge trades, well, they're hedge trades as a whole, right? So we took some losses on the hedges, but at least the portfolio is fine. But what I want to focus on is the strategies that I preach on the channel, looking for the directional trades and how I look for them, and the wheel trades and how I look for them. Every single one of the normal strategy trades, once again, very solid week, no losses there whatsoever. So I'm very happy with this week's performance. And for the most part, our members made a lot of money as well. So what do we have remaining moving forward for the next week? Well, nothing has changed. AMD bull calls debit spreads. I still have them. And yes, I did, as a matter of fact, add to them as well. Added one contract here on the Thursday session. Around the end of the day for 65 cents. My average cost on these are $169, a little bit far away, $170, $175. But if we get the infamous everything rally and semiconductors finally come back in the next 2 months, I have until February. So I'm going to leave these open. Whatever happens, happens, of course. Amazon leap call options not doing so well because I admittedly played the Amazon breakout. Not my preferred area to go shopping for leaps, but I did say if we come down here, I will average into more. I went for the breakout trade for the full weekly and the full monthly breakout as well. And it's been held back, right? We had that big tech sell-off day last Friday, and all last week was bad, and Amazon has never been able to recover. Then we had the European Union lawsuit headlines or investigation headlines, not able to recover. So usually when I buy my leaps, you guys know when I like to buy my leaps, right? In periods of consolidation and whatnot. But sometimes I do take the risky gambles, fully knowing that we could just give it all back and I have to DCA. So this one will be a DCA for me most likely. And we have all the way through January 2026. I think these calls will be able to make profit on them. But for now, you guys can see the loss is right there, right? Fully transparent as to why I take the trades and what I'm expecting from them. ASML, bull call debit spread, still not adding to those. I need to see a daily uptrend shift in ASML before I get interested in playing the options, because as of now, the bulls control nothing. They don't control the monthly. They don't control the weekly. You can argue that we're weekly oversold on everything. Yeah, but it doesn't matter. We need to see the bulls manifest into a rally. I need to see institutions starting to bid this stock. But until for now, apparently nobody cares because it hasn't been doing anything. So we know it can consolidate sideways for a long time. So I'm kind of writing these ones off for now. We have until January, most likely going to result in a loss on those calls. But I kept these very small. One contract, $400. Not as if I went all in. I tried to buy the post-earnings dip, going for a quick recovery because I felt that the market was wrong. And I still think that the market is wrong, but time, guys. If I had shares, I wouldn't care. But the timing of these options, even I put 3 months of time, and it might not be enough. Berkshire, we went over those. One contract left, closing those at the all-time highs, 480.45. The Elf Beauty, these are worthless. These will be called away. Enphase as well, these are called away. I do still have the reason also that I didn't mind not rolling is because if these stocks run away next week and I cannot write the 63s again, I have call options for these, so no problem at all. The Google call options as well, these I told you guys about earlier on the channel. 180 calls. Yesterday, when the Department of Justice had their headlines, I bought the absolute bottom of that move, and now we are right back down there. So unfortunately, I am slightly down on these calls, not too much, but we have until March for the 180 calls. 180 is not that far away. It's literally where we were just a few short days ago. So I do think Google has a good chance of recovering, you know, by the end of March, where I have these call options. We still have the leaps, even though the leaps, you know, have been down significantly over the last 2 weeks. I'm still very bullish, have a long runway until next September. So I'm looking for that expansion on Google as well. Still have the Intel asymmetric bets, looking for $30 to contemplate closing these. Still the IWMs, those call options are moving nicely. For the IWM breakout, the Coca-Cola calls that I was talking to you guys about, even though that I didn't get the best price, I got in here, right? And I did not DCA. I'm looking for the same thing as ASML. I want to see the daily uptrend because as of right now, it's just a daily bounce, but the bears can roll this over very, very easily. I need to see the daily uptrend formation. And when I see the daily uptrend formation, I can go for more calls because now I know the bulls are going to be looking to at least give us some weekly rally to possibly recapture the weekly uptrend in context of the monthly higher lows for further trend expansion. I know I went through that one fast. Rewind the last 30 seconds if you need to. Microsoft bull debit spreads, still have those. The December ones, not looking too hot. Still a decent amount of time. Couple weeks left, 3 weeks. The Microsoft ones for February, still looking decent. A little bit down on those, but I think Microsoft should be able to, especially with the rest of the market rallies, should be able to put together somewhat of a rally to 430, 440. So we'll keep an eye on those. Not too heavy though on the Microsofts. Micron asymmetric bets, we'll see how those goes as well. We have a lot of time on those contracts. NVO, same thing, buying oversold conditions, looking for a bounce on NVO by April. So we are oversold, looking for a bounce by April. Bought them at the lows, but we kept on dipping a little bit lower. We're down on those. ON, these get called away. Oxy, these are pretty much dead, guys. I bought these like 3 months ago at this point in time. They're dead. We had 3 contracts, not that big of a loss, $255. Oxy, essentially, those call debit spreads, I never go over them, so you guys might be curious. Oxy, what I was looking for, guys, was here. We were coming down. I was looking for the expansion, the breakout, the retest and run. Did not play out. Oopsie doopsie. Have a loss on those. I did not go too heavy because I knew that there was a risk of that happening. So I did not put more capital than I was willing to lose. Oxy, these March 55 calls, we got them down here. Now they're still slightly underwater, but if Oxy puts together a rally sometime before the month of March, these should not be doing good. This is the only oil exposure I have right now. We already closed one of these call contracts at $5.50. About 3 weeks ago at this point, 3 weeks, a month ago at this point, closed them for profit. Now we're just going to wait for this remaining contract to come into profit as well. SMCI gets called away, but I will be playing SMCI over the next few weeks aggressively. SOXL gets called away. We still have the call options as well. We're going to wait for these for the infamous semiconductor rally, but you see, I only have one call in the money. I'm fully aware of the time decay. I'm fully aware of the volatility decay in these ones as well. Trust me, guys, I'm fully aware. I've been doing this for a very long time. This is just my play. I do the 3 times leverage ETFs. When I feel that they've been crushed for a very long time, they're at relative lows, this is the time that I take a little bit of a gamble on those. So those are the call options. Only one contract, kept it a little bit small. And moving on further, the square leaps, we discussed those a lot, and the TLT hedges, which are still losing money as I tried once again to play the bond rally that everybody's been expecting and is just not coming. I still have some time on these. These Decembers are worthless. This was for the doomsday scenario. These ones for January, the 94s, well, they're not looking too good right now either. Once again, a hedge trade for an entire portfolio. At the TLT June, 95 calls. These have a lot of time on them, but you can see I bought them when these were in the money. TLT was like 98, 97, and now we're all the way down to 90. So we will see if that TLT trade comes alive in the next 6 months and can salvage maybe some of these calls, or whether or not I just lose everything on a hedge. This was a hedge trade for the rest of the portfolio, right? So that's pretty much everything for our current positions, guys. I got a lot of buying power coming into next week, so I'll be looking to shop for the dips once again, as per usual, the wheel strategy, the directional trade strategy, and I'll give you guys the top 5 options at the end of the Sunday session. So that's pretty much everything for me, guys. If you enjoyed today's video, consider dropping a like. Would appreciate it for the growth of the channel. Also consider subscribing if you're new. We do these every Monday through Friday after the close. A little bit longer on the Friday since we recap everything and all of my portfolio, so apologies for the length. And lastly, if you have any questions whatsoever, please feel free to leave them down below in the comments section. If it's questions about tomorrow's video and the hot topic of the market right now, I'll cover a lot of those in tomorrow's video, but feel free to leave them in tonight's video all the same. And in the event, guys, that you want access to all of these trades, right? All the trade setups, the usual ones. Most of my members do not take these earnings trades, guys, as a whole, right? So as a whole, if you want access to the regular strategy trades, which always do fairly well, you can go back in time, right? These are the assignments from last week, which are out of the wheel trades, the directional trades. You can see very transparent, right? Few losses here and there. OXY TLT justified that on the channel. Few losses on the directional trades. Usually they're very tiny, but you can see I go back in the history. Most of all the strategy specific trades always do fairly well. This is going back to the start of the Discord, right? So if you want access to all these trades in real time, and also access to the private morning live streams, which we do for about an hour, 2 hours every single morning, all the different setups with either a small, medium, large account, guys, or something for everybody, the wheel trades, long dated wheel trades, shares, call options, debit spreads, long-term portfolio trades as well, and all the discussions in between. If you want to ask me in real time what I think of a stock, what I think of an option all throughout the day, I'm here every day and I answer super fast to everybody with obviously charts to support the analysis, right? If you want to have access to all of those juicy things and be in our Discord, well, the link is down below in the description of the video. So hopefully I see you in there. And if not, well, I guess I'll see you back on the channel. Take care, guys. Have a good start to your weekend. The video tomorrow, hot topic, and the top 5 options plays on a Sunday. Take care, have a good weekend, and peace.